Welcome to Coverage Clarified, where we make insurance simple, clear, and jargon-free. If you have searched for life insurance basics or wondered what all the terms mean on a policy quote, this video walks through the 5 most important words and concepts you will encounter. Life insurance is a contract that pays money to your chosen people after you pass away, but the language can feel confusing at first. We will define each term the first time it appears, show how it works with everyday examples, and share questions worth bringing to a licensed agent. Remember, this is general education only, not financial or insurance advice. Everyone's situation is different, so always speak with a licensed insurance agent or qualified financial advisor before making any decision. Understanding these core ideas helps you read quotes and policies with more confidence and ask clearer questions when you are ready to explore options. The 5th thing to understand is the premium. A premium is the amount you pay to keep the policy active, usually monthly or yearly. Think of it like a subscription that keeps the coverage in force. When you apply, the insurer reviews your age, health, and other details to decide how much the premium will be. A higher premium often buys more coverage or a longer guarantee, while choosing a higher deductible on other types of insurance can lower the premium. But life insurance works on a different model. Many policies let you pay the same premium for a set number of years or for your entire life. Ask how the premium is calculated, whether it can rise later, and what happens if a payment is missed. Also ask whether the premium includes any extra features or riders, and confirm the payment schedule that fits your budget. Knowing how premiums work lets you compare quotes on an equal footing and see what you are actually paying for over time. Number 4 is the beneficiary. A beneficiary is the person or people named on the policy to receive the money when the insured person passes away. You can name one person, several people, a trust, or even a charity. The beneficiary designation usually overrides what is written in a will, so keeping it updated after life events like marriage, divorce, or the birth of a child matters. Most policies let you choose a primary beneficiary who receives the money first, and a contingent beneficiary who steps in if the primary is no longer living. When the claim is filed, the insurer pays the benefit directly to the listed beneficiaries, often within weeks. Ask how to name or change beneficiaries, whether the policy allows multiple people to share the benefit in specific percentages, and what documents are needed to make a claim. Also ask whether the beneficiary can be a minor and what options exist for managing the money until the child reaches adulthood. Clear beneficiary choices help the money reach the right people without extra delays. Coming in at number 3 is the death benefit. The death benefit is the amount the insurer pays to the beneficiaries after the insured person passes away. It is the core reason most people buy life insurance. The size of the death benefit is chosen when the policy is purchased and stays fixed in many cases, though some policies allow increases later. The money can be used for any purpose the beneficiaries choose, such as replacing income, paying off a mortgage, covering final expenses, or funding education. Because the death benefit is paid tax-free in most situations, it often arrives as a lump sum. Ask what conditions must be met for the full death benefit to be paid, whether any exclusions apply, and how the benefit amount can be adjusted if family needs change. Also ask whether the policy offers an accelerated death benefit option that lets the insured access part of the money while still living if certain health conditions arise. Understanding the death benefit helps you match the coverage amount to the financial responsibilities you want to protect. Number 2 is term life insurance. Term life insurance provides coverage for a set number of years, such as 10, 20, or 30. If the insured person passes away during that term, the death benefit is paid. If the term ends and the insured is still living, coverage stops unless the policy is renewed or converted. Term policies generally have lower premiums than permanent options for the same death benefit amount because coverage is temporary. Many people choose term life when they have a mortgage, young children, or other time-limited responsibilities. Some term policies offer the option to convert to a permanent policy later without new medical questions. Ask how long the term lasts, whether renewal is guaranteed, what conversion rights exist, and whether the premium stays level throughout the term. Also ask how the policy handles the end of the term, and what steps are needed to keep some coverage in place if desired. Knowing how term life works helps you decide if a temporary window of protection matches your current stage of life. The single most important concept to understand is whole life insurance. Whole life insurance is a permanent policy that covers you for your entire lifetime as long as premiums are paid. It includes a death benefit plus a cash value component that grows over time and can be borrowed against or withdrawn in some cases. Because coverage lasts as long as you live and premiums are designed to stay level, whole life policies usually cost more than term policies with the same death benefit. The cash value grows slowly at first and can serve as a savings element inside the policy. Ask how the cash value is calculated, what interest rate it earns, and how loans or withdrawals affect the death benefit. Also ask whether the policy allows premium payments to stop after a certain number of years while keeping coverage in force. Understanding whole life helps you weigh the trade-off between higher costs and lifelong protection, plus the cash value feature when comparing it to term life or other permanent options. In this video, we covered the 5 key words every beginner needs to know: premium, beneficiary, death benefit, term life insurance, and whole life insurance. Each term plays a specific role in how a policy works and what you receive. Start by deciding how long you need coverage and what amount would replace income or pay obligations. Then compare how term and whole life handle that need and review the beneficiary choices and premium structure on any quote. Questions worth asking a licensed agent include how the premium is determined, how to name or update beneficiaries, whether conversion options exist, how cash value works if the policy offers it, and what happens at the end of a term. Write down your own financial goals before the conversation so you can match the policy features to those goals. Subscribe to Coverage Clarified for more plain language explainers on insurance topics. Remember, Coverage Clarified is general education, not financial or insurance advice. Everyone's situation is different. Prices and rules change and vary by state, so always talk to a licensed insurance agent or a qualified financial advisor, and check current details with an official source before making any decision.